Here's how I find the best rates for my clients. I use a program called Optimal Blue, and I start by inputting some parameters. So I'm looking at a $500,000 purchase price with 20% down, so the loan amount's going to be $400,000. Then we'll throw in an 800 credit score and make sure that we're looking at a conforming conventional 30-year fixed rate mortgage. And this will bring up our different pricing options. We have the ability to shop more than 30 different lenders to find the best cost for each rate. And the best part about this is that they trust us to do the underwriting. So this is what makes me a delegated lender. So all of the service is performed in-house, but the lenders are forced to compete for our business when the transaction closes. So now we can see a ton of rates, and that's because every rate is always available. It's the cost of the rates that change with the market. So the interest rate is on the left, and we can see the name of the lender, the lock period, and cost as a percentage of the loan amount, and the cost as a dollar figure. And then there's principal and interest, which shows how the interest rate changes the monthly payment. By the way, it says expired on here because I'm filming this on the weekend when the markets are closed. So therefore, this is not an advertisement for a rate, and these numbers will not be available to you as a consumer because they will likely change when the markets open tomorrow. Now, the goal here is not to find the lowest rate, it's to find the best rate. So I'm going to try to find the options that make the most sense and prepare them for my client to make the decision on their own. For example, is it worth it to pay a discount point or two? Even if this is their forever home, how long might they keep this mortgage before they refinance? If we know they won't be at this house for more than 2 years, then it's probably best to look into getting lender credit in exchange for a higher rate. So to show you what this looks like, I'll just take these options, give them a name, and import them over to my Mortgage Coach software, which will show us all of the numbers. Now, this first section shows a breakdown of all of the numbers like the purchase price, the loan amount, interest rate, APR, monthly payment, cash to close, all that good stuff that I so desperately wanted to know when I was buying my first house, which is why I make a presentation like this for every single one of my clients. If we scroll down some more, we can see the difference in the monthly payment, the savings over 60 months, and the interest paid over 15 years. But the most important section by far is this savings in 60 months because it compares the difference in lender fees, monthly payment, and the principal payment over the course of the time frame I'm selecting here. Now I chose 60 months because research shows that the average mortgage lasts 5 to 7 years, even though people live in their homes an average of 7 to 10 years. So this gives us a good idea of which loan option is best suited for us over the course of time that we expect to keep the loan. So for example, the first option with paying one discount point might be the best option over 5 years. I could change this too. Like if I think they'll be refinancing within the next, say, 18 months, it becomes abundantly clear that we'll save more money by going with the higher interest rate option. So if you have an idea of how long you'll keep the loan, this will help guide you in making the best decision for you and your family. I hope this helps. Feel free to drop a question in the comments and save this video for later.